economic backdrop is there, the possibly recession, economic turmoil, and the miners, for some reason, they just love that.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Hey everybody, and welcome to another episode of Talking Trades with myself, Kevin Wadsworth, and my business partner and friend, Patrick Karim. Pat's going to talk to you today about gold and silver miners and some correlations that help us to identify what is likely to be happening. It's a case of building evidence with things like unemployment data, for example, and how unemployment data relates to those gold and silver mining charts. So, Pat, let's take a look and see what the charts are telling us today.
All right. Thanks, Kev. Yes. It's like people, let's say they want to buy gold and silver miners, and then they're wondering, well, when are these things ever going to go up? How come they're not going up? Well, as a chart trader, of course, you could just look at the chart and wait until it breaks out and starts trending upwards on, let's say, the monthly time frame. But if you want to look at the weight of evidence, you want to see what macroeconomic landscape has to be there or is usually there when gold and silver miners have nice uptrends, right? Because the only way you can make gains is by buying anywhere, but having an uptrend after that, right? If you're buying and then the uptrend just stops and goes down, then you're going to get triggered out, you're going to lose money on your investment, etc. So an important part is in the macro landscape am I the beginning of potentially a nice run for my miners, which could last many years? Or am I towards the end? Am I in a macro landscape where even if my miners are going up on their own charts, they're towards the end of having tailwinds and more headwinds coming in? So that's very important to find out. And using charts, you could dissect and collect that information and apply it to your weight of evidence. So what I'm going to do, I'm going to show you a chart because that's how you do it. So what do I have here? I had the unemployment rate from 1948 all the way to today. And you see there's cycles in here. There's cycles going up and down of an employment rate. But notice also there's a bigger cycle, right? Because these up and down cycles, smaller term cycles, are within a longer term rising cycle, right? Same thing here. There's up and downs in unemployment, but look, see the trend is downwards, right? Lower highs, lower lows, until it starts again. Higher lows, higher highs, and then you have cycles within that of unemployment and trends upwards and then downwards. And then that's where we are today. All right. But I've looked at so many charts, and when I see an unemployment rate chart, I say, hey, that kind of looks like another chart I've been looking at. And it's the gold and silver miners. And of course, I use ASA. This gold and silver's precious metals fund tracks or is tracked by JDX, by the Huey, by JDXJ, SIL, SILJ pretty accurately. But the beauty of this one, guys, is that it has data going back all the way to the 1960s, 68. It starts here. So here it is. I'm going to just put on logarithmic, move that to new, pin to new scale on the right. There you go. And I'll change the color for you guys. Maybe you'll like it in a thick orange, and here you go. So look at this. Look at the miners were in an uptrend during these cycles of unemployment going up and down, but trending upwards all the way up here. Then after that, as the unemployment was starting to cycle downwards, miners stalled, refused to do new highs, and then after that went down into the lows, the 2000 lows. New cycle in the unemployment. Up and down, up and down. Look what the miners did. Up and down, up and down. The ebbs and flows don't overlay perfectly, but from a bird's eye view, if you look at that, you could see that there's clear visual correlation to this. Here again, top, miners top. What happens? That was the top in unemployment. Unemployment is starting to go in the bear market. So that means the unemployment rate is lower and lower. Here was a spike in the March of 2020. Unemployment, miners went bonkers. And look at it today. Look at this. Look how close it's tracking. But remember, it doesn't always have to track that closely on the short-term cycle. But what's important right here from a macro landscape is what I'm looking for is higher lows. So next time I'm going to show you here with my little roadmap tool, just to imagine what could be happening to unemployment rate. So unemployment rate right now is going up. I don't know where it's going to stop this one. Let's say it stops here, it goes down. This next reaction is going to be probably the most important one. Will unemployment rate, if it does a higher high, a higher low, then we're building a new uptrend. And as soon as it does a higher high, then that's an uptrend. That's the definition of an uptrend, is higher lows, step one, higher highs, step two. If ever this unemployment rate really starts and crashes back down here, then that's something, we're still in a downtrending market for unemployment, which should create more headwinds than tailwinds. But right now, look at the unemployment rate. It's moving up. It's never failed to keep moving up after it's moved that much off a bottom. Let's check it. I'll show you how much it's moved right now. It's moved 24% off a bottom, 24% off a bottom here, 24% off a bottom here, 24%, 24%, 24%, 24%. So whenever it's moved 24% off a bottom, it's never failed to double after that or go much higher, right? Here, this one here, it doubled again, doubled. So for me, from a statistical probability, I'm expecting unemployment rate to maybe, if it consolidates here, but to continue higher before it go lower. And if it goes higher, for me, we're probably in a new cyclical uptrend for unemployment. And I'll just overlay one last thing for you guys, just for visual. Look at when I overlay the recessions, guys. The recessions, the green overlay, they often coincide with this unemployment going up. See, whenever there's unemployment, economic turmoil, recession. Look, we could be starting a recession really soon if we're not in one already, but you have to expect that unless this thing totally unwinds here, we're probably going to be one also. And that, the miners love that, guys. And here, even on my miners chart, look at this beautiful breakout line. It's getting very close. 1, 2, 3 valid touch points. It's getting very close to a breakout. So you gotta, when you look, take a step back, Kevin, and I see all this, I say, goodness, it's like the setup's there for, I know the miners went up a lot, but the economic backdrop is there, the possibly recession, economic turmoil, and the miners, for some reason, they just love that.
Brilliant stuff, Pat. Yeah, that corroborating evidence is what it's all about with technical chart trading. You never just take one piece of evidence. So if you can pull together additional supporting evidence wherever it's from, and that correlation there is just one of many examples, of course, and a really brilliant example. If you can bring all that together, that really helps you to gain confidence that your idea about where prices are going is correct. Well, if you enjoyed all that, make sure to like, subscribe, and hit that notification bell for more, and we'll see you for the next Talking Trades.